Hey Cole,
Hey,
how are
what's
you?
up? I'm good. How are you?
I'm good. Just routine still.
Yeah, I hear you there.
Yeah, I had two closings this morning and I wasn't able to go to neither one of them. So,
Oh, they're keeping the realtors out, huh?
yeah. And
Just
then
about,
my
yeah.
client said she had to scrub in and scrub out basically. And they have whites and Costner Law is actually doing drive-by closings where you don't even have to get
Oh,
out of your car.
interesting. So what do they just like go up to the car window and like have them
Yeah.
sign the docs?
They go
That's
over
pretty
all the
wild.
documents, they sign it. So I have one more closing today and then done.
Heck yeah, that's awesome.
Until later this week, I think. This week is crazy. But
That's good.
yeah. So how are things going with you?
It's good. Yeah, things have been pretty busy. Today's been a little bit slower, but the
Mhm.
last week or so has been crazy. Just trying to get,
Yeah.
because it's like every time the rates drop, you get like an influx of refinances. So
Hmm.
it's like getting everything set up, getting it passed off to the processor to kind of rock and roll. So it gets really busy and then it like slows down and then it gets really busy and then slows down because it's just like how volatile these rates are.
So now is a good time for people that maybe bought a couple years ago to refinance or
No, well, today in particular, no. But it's crazy. Like, and when we do the video, I'll kind of talk about it. Are we already recording? Oh, snap. Okay. I apologize. So let me go a little bit more in depth
yeah.
with it then. So, like, for example, last Tuesday, I believe it was, we were quoting record low rates, like rates for a 30-year fix. Somebody with great credit was down in the low 3% range. So, for a conventional loan, that's really, really good. And so there was a big influx of people who were wanting to refinance. And the
Hmm.
thing was, it's just every day it was getting more volatile because we're kind of going into unprecedented times. The Fed's doing all they can with the stimulus.
Hmm.
Mortgage lenders are getting beat up, which we'll talk about here in a little bit. So it's like interest rate pricings could not find their ground. It was back and forth, kind of like a seesaw.
Hmm.
So we were able to take advantage of the day or so where rates actually stay low to try to lock some people in for those refinances. So it was kind of funny. Over the last 2 weeks, it seemed to be like a common pattern, which we were seeing. So I was telling anybody, I was like, if you want to refinance to save some money on that monthly payment, let's have an application ready to go because we don't have time for me to call you during the day, say, hey, now you need
Right.
to fill out the application. And then we'll end up missing out on the low rate. So got some people to come in, do applications, and that was beneficial to them because I was able to just give them a quick call. They say lock it, and then we rock and roll.
Mhm.
So it's just a really weird time, and it's not normal by any means
Yeah.
necessary.
There's
Um,
nothing normal about this. It's like people say, well, what should I do? Should I buy now? Will the prices go down? And I'm like, I don't really see prices going down. Now it started to stagnate like at the like anything above like 350.
yeah,
The days on market went up a lot, but like people are still buying.
yeah. Well, that's got to be interesting for you guys. I mean, I've had a few buyers come through the door the last couple of days, but with you guys, like you can't show houses, right? Currently, without,
So
yeah,
new construction is a little bit easier, and a
gotcha.
lot of my videos made it a lot easier because I can say, well, I have that floor plan, just drive through the neighborhood. But I don't really want to be out, and my buyers don't really want to be out anyway, and we're technically on lockdown.
Yep.
So, yeah, it's we're really just I'm just trying to educate my
Yep.
clients like what's going on, so when this thing drops, whenever it does, that they'll be ready.
Yep.
Um, I sent you the graphic yesterday of some people are like, I'm not even thinking about buying a house anymore. Um, just because this is going on doesn't mean that the rents are going down or it's getting cheaper to rent.
Yeah,
So,
100%.
um, it is interesting. So you mentioned the rates going up and down. I had a few people lock in at some awesome, ridiculously awesome rates lately. But what programs has conventional requirements and FHA VA requirements changed any?
Yeah, no, that's a great question. So, yeah, there's been a lot of overlays that have popped up. For instance, with the government products, some lenders are not even doing government loans at all. But what a lot of them have done is lift or made the credit scores higher. So, for instance, movement in general, we used to potentially be able to go down to a 580 for FHA, VA. From that 620 to a 580 was a manual underwrites, but we had the ability to do that. Now they pretty much put an overlay at 640.
Wow.
So if your debt to income ratio is under 45%, then we can do a loan at 640. If it's over 45%, then you have to have a 680 minimum credit score. So they've definitely tightened up a little bit there. And I think I told you yesterday with the bond programs, where the state or the city is giving you some sort of money to help purchase.
Like how Charlotte, those.
Yeah, how Charlotte, North Carolina housing. Not sure about NAC or anything, but
we don't mention that.
I hear you there. But yeah, they put we got a company newsletter the other day, and they put a pause on those, and for at least the next 60 days. So the good thing is they haven't gone away completely, just a pause, and then we're going to reevaluate after those 60 days. But I've also talked with some other colleagues in the industry, and it's not just movement, my company. It seems like everybody's kind of taking a step away on those bond programs for now, as well as having those higher overlays on those government products like FHA,
VA. Is something that differentiates you from other lenders. So that's like a movement mortgage overlay.
Yeah, that's a great question. Yep. So like, for instance, Ginnie Mae is the one who typically buys government loans, your FHAs, your VAs, and all that good stuff. So they're going to have a minimum requirement. Like, let's just say that's a 620 credit score. And then what happens is lenders can kind of protect themselves a little bit more, right, and they can have an overlay. So they may say, all right, well, we're not going to take anything under 640. So yeah, that's ultimately what an overlay is.
That's good to know, just because I remember back in 07, 08, I don't believe there were any overlays to protect anyone. And like the DTIs, I mean, I think that things were just sort of pushed through. So what do you recommend people to do right now? Like, let's say if their plans to buy a home is in October, like how long is that approval letter good for? Like, what should they do now? Like, what should they do?
No, that's a great question. And we touched on this yesterday. I think we both have a similar mindset when it comes to this. Mm-hmm. I think it's still a good time to buy if you are in a good financial position. Now, we all know that this is a very unprecedented times. Unfortunately, we're seeing unemployment numbers go through the roof. It is a little scary, to be honest with you, but if you feel that you got good job stability, mm-hmm, if you have assets on hand in reserves, so meaning that when you buy that house, you're not spending everything in your bank account, then I think it could be a good time to continue to look. I know you mentioned you don't see house prices dropping too much, but if something does change a little bit there, then this could be a good time to take advantage of the market. And plus, we're going to have low rates. I know it's been really crazy the last 2 weeks. I think
that anything with 4.5 is high, but 4.5 is technically pretty good, because I had 6.5, some 7s way back when. So
yeah, still that's very, that's a very good rate overall. So like, just to kind of give you guys a little bit of an idea, I'm not going to go too far in the weeds, but kind of what's going on the mortgage side right now. Literally 2 weeks ago, when we first started to see all these record low rates, there were so many transactions coming through the door. I think the statistics was there's over $12 trillion of refinances out there that could benefit from refinancing. Last year, as a mortgage industry whole, I think we did a total of maybe it was 3 or 4 trillion. So 2 weeks ago, when rates hit record lows, we literally had $5 trillion worth of refinances trying to come through in 1 month. We didn't even do that in a whole year. So you can just imagine the capacity issues that all these lending channels were having. So that was making it very tough, because lenders, you just physically couldn't take any more through the door. So they were having to price themselves out of the industry. Well, then all of a sudden, the economy is just getting beat up by this virus, understandably. So what's the government have to do? Well, they got to get stimulus out there. Well, how do they fund stimulus? They're issuing more treasury bonds. So ultimately what that's doing is oversupplying the market. So rates cannot figure out a ground where investors are comfortable. So it's boosting rates. And then since then, not to get too far into the weeds again, like I promised, but ultimately what mortgage lenders do to protect rate locks is they shorten mortgage-backed securities. So for instance, if somebody's going to lock in, right? So that's the lender guaranteeing like, hey, we're going to lock you at 3.5%. Well, if mortgage bonds get worse, then that lender has to pay down. They have to pretty much buy down that mortgage bond for you as the buyer, because they promised you that you're getting a 3.5 no matter what. So what mortgage lenders do to protect themselves is they short mortgage-backed securities. So if mortgage-backed securities get worse and rates get worse, then they kind of have that protection against the money that they just had to spend to buy you down.
Well, I
So
can see why they're stopping.
Yeah, 100%.
Right now,
And,
if they're already locked in, like, so let's say that someone went under contract like 2 weeks ago and their stuff was locked, even with down payment assistance, will they still get that down payment assistance? Is it the whole picture locked in, or is that up in the air as well?
yeah, no, that's a great question. So as far as my understanding is, if they're locked, meaning that that lock was submitted through North Carolina Housing or whatever it may be, then they're good to go prior to that date when we put a pause on it. So those loans can finish out, is what my understanding is. But if you were a pre-approved buyer and you were pre-approved to do down payment assistance, definitely have a conversation with your lender, because that is all probably changed. I've had to make some phone calls last Thursday that were tough. I had to tell people, hey, I know you were super duper excited to buy, but look, unfortunately, this is what's going on. We got to put this on pause right now. Unless we can look at other options like traditional FHA, VA, of course, over that overlay of minimum credit score.
Right.
So that wasn't fun at all. But guys, the ultimate goal behind this is we as a lender do not want to put you in a position where you're ultimately going to end up in financial trouble.
Right. I'd rather walk away from the deal too. Like, there's times where somebody's not really sold on it, or they're stretching themselves too thin. And those are tough conversations to have. Like, do you really want to live paycheck to paycheck? Is it worth it? So
yeah, 100%. And another thing that I wanted to kind of touch on, since we're on that conversation now, is, with the CARE Act that I believe was passed over the weekend, there's a lot of different stuff in there with the stimulus. For instance, if you're a single individual, I think you can get up to $1,200, what the check's going to be. I'm not going to get too far into it, but and then there's income limits too.
For it. It makes me so upset.
I know, yeah, because it depends on what you make, right? Yeah. But as a part of that package, they started talking about mortgage forbearance. So I went kind of back into it, and the Fed does not do the best job of explaining stuff. Okay. And so they pretty much tell you that, you can go apply for forbearance. You don't even really have to show proof. You just got to be able to show a need for it. Well, guys, be very, very careful with forbearance, because you need to know the fine print, if you will. I heard a good analogy this morning. It's kind of like when you go furniture shopping, right? And they say, all right, no payments for the first 3 months. Well, guess what? They're going to collect those payments. So yeah, you might be put in forbearance for a few months, but guess what? When this thing's all done and this forbearance period is up, you're going to owe that money back. So you got to be very, very careful with that. Now, don't get me wrong. If you are unemployed and you really, really need it, reach out. It's there for a reason, right? But if you're just thinking that it's going to be a free few months and you can't afford to pay your mortgage, don't do that.
I see a lot of people going out with rent right now. Landlords going crazy because they're not going to get their rent. So hopefully there's something out there for homeowners that are renting out homes, because people are not going to pay their rent for the next few months.
So true. And I think the government realizes that this is a real issue. So they're working on things on the back end. They are smart people. Sometimes they just don't do the best job of explaining things. Like, for instance, when we all heard that the federal funds rate had dropped almost to 0%. Yeah. It was so funny. I heard a lot of people, and not to pick on anybody, but it was like, all right, well, I'm ready to lock in my 0% mortgage rate. And it's so important to know that the federal funds rate is short-term lending. That's pretty much like what the bank lends overnight. So that's your car loans, credit card interest, like all that kind of stuff. And so mortgage rates are not tied to that. That's long-term lending. So over time they can have an effect. But so really what we saw is everybody thought that these rates were going to get so low because the Fed dropped, and a lot of people were jumping ship. They were mid-refi and decided, okay, well, we're going to jump ship. And what happens is all these lenders had these people locked in, right? And they were shorting the mortgage-backed security. So when these people leave, they have to pay that money. So mortgage lenders were getting beat up left and right on pricing and stuff, and losing a ton of money. And ultimately, that's what the Fed's been trying to do over the last few weeks, was buy mortgage-backed securities. Ultimately bring mortgage rates lower to spark buying. But what happened was they're actually affecting the mortgage industry negatively. They didn't realize it, but they are, because every time those rates go lower, all those lenders who have rate locks, those margin calls happen and they have to pay out all those shorts. So lenders were spending tens and millions of dollars
Oh my goodness.
having to pay this out. So like it was really hurting the mortgage industry. And thank goodness this week they kind of realized, all right, we got to slow down on these mortgage-backed securities that we're buying. So I think we're going to see some good pricing here in the future. Now you got to sit tight. It's a little tough right now. Mortgage rates still cannot find their floor where they're comfortable. It's going to be volatile, but in a few weeks or a month or two, I think we're going to start to see consistent low rates.
Where we were at before, like
Yep.
December, January. I can't say anything in February was normal either. So it was, there's a lot of fear out there. Have you had people that were under contract and they backed out of a contract?
Me personally, I have not, to be completely honest, but I have heard of many people, many colleagues that have had people that they just, they were either worried or some of them have even lost jobs. And that's another thing that mortgage lenders are doing right now is we used to do 10-day verifications of employment. That's pretty much where we're 10 days from closing. We just got to verify you're still employed.
Still working.
Yeah, well, they've cracked down now. It's 5 days. So they're really worried. These servicers are really worried that last thing they want to do is take on a loan that's going to default because the buyer lost their job. And it is a little scary right now. So lenders are taking extra protection on that just to make sure, because like we mentioned earlier, we don't want to put you guys in a bad situation. That's not the goal here.
Yeah. I had a client that was under contract for maybe 4 or 5 days. And it was rocky from the beginning. And so once this virus hit, they were like, you know what, we're just going to pump the brakes. And even though their rent is going high, I think it's the best choice for them just because you got to be in it to win it right now. Like there's really no back and forth or price shopping, because by the time you price shop, the rates can change.
Oh, 100%. Yeah. Yeah. You got to be very careful with that. And I always try to tell people in the most friendly way, don't try to be greedy. Take advantage of the market. If you're going to save, especially on the refinance front, if you're going to save $200, $300 a month, what's the difference between a 3 1/4 and a 3 1/8? Come on. It's going to be like $5 and you're going to miss out on the opportunity of a lifetime.
The difference from a Friday afternoon, like 3%, and a Tuesday was 4.5%. So just that length, like if they locked it in and then Tuesday it changed, and it was like you wouldn't have been able to afford this house, period, because you were already so close on your margins and everything. So, but
it was really wild. It was like, because I had a few pre-approved buyers for the down payment assistance program. So I was like kind of watching their rates. I was a little worried. Their rates were so volatile. Literally, it's like 1 minute rate was at like 4%, let's say. Next day was at 5%. And guess what? Those programs have those hard cutoffs on debt to income. So it was like, oh crap, if they go to 5%, they wouldn't qualify if they went under contract. So it was a little weird there for a little bit. And it was super.
It's hard to not come off as pushy right now too. It's like, because you touch loans, you know the lending market, you look at it every single day. And then I look at real estate every single day. So sometimes it's hard to step back and explain this to someone who is only doing, it's their first time doing it or their first time refinancing. It's hard to explain it like you have to move quick without coming off as like salesy and pushy and all that good stuff.
No, I'm with you 100%. Yeah, that's the biggest challenge right now. Well, I just thought about something because you asked me before and I think I sidestepped it, so I apologize. But you were talking about, is now a good time to buy and how long does pre-approvals last and all that good stuff. So just wanted to kind of circle back to that. Now is a great time to get pre-approved, of course, if you're stable. But to kind of go back to that question that you asked, pre-approvals are usually going to be good for, well, let's backtrack. Credit, once we pull credit as a lender, credit is good for 120 days. So just know that if you don't close on a house by the 120th day, then we're going to need to repull credit because we got to keep that report fresh. However, the actual pre-approval itself usually expires about, I would say around 45 to 60 days. Ultimately, it's when the underwriter says, all right, we need to update documents, which is understandable. We want to make sure your income hasn't changed. We want to make sure you're still in a good position asset-wise. But the main thing to worry about is the 120 days of credit. And it is a hard credit pull, guys. I know that's one of the most popular questions that I get in the mortgage industry. You're going to pull my credit as a hard pull. Yes, guys, it is a hard pull, but keep in mind, It doesn't hit you as hard as like a credit card inquiry or car shopping, because I don't know if you've ever been car shopping, but holy moly, they'll hit you with like 8 inquiries. Boom, 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 boom. Yep. They're like, oh, well, we'll
What?
shop you across banks or whatever. And it's,
Oh my
they're hitting
goodness.
you multiple times. So when you apply for a mortgage loan, you have a 30-day grace period. So once that credit's pulled, you have 30 days to do your little due diligence and mortgage shopping, and it's only going to hit you one time. So just know that it's not the end of the world to get a mortgage pull, but it is important to know that it is a hard pull. So.
Yeah. Trying to get people, there's like, I just want to talk to the lender about my credit that I found on Credit Karma or whatever program they're using. I'm like, no, they have to pull it because they have like special numbers that they look at. It's
Yeah.
not the same thing. But I don't know. I'm very interested in how this is all going to pan out. I was mentally prepared for April 9th, and now we're at April 30th. So I'm essential and non-essential. So essential for everyone under contract, but non-essential, so I can't show property or host open houses. And I can still go to home inspections, but it's
Yeah.
after this week, I think I have like 9 or 10 more clients. So
Oh, wow.
I sound
Okay.
like a stir crazy and not talk to anyone but my family in the house. But
No, I'm with you 100%. I feel like I've gotten more done around the house than ever before.
someone built me a fence around my garden. That's how much
That's
time we
awesome.
have. My garden is going to be amazing this year. So what can you do? Because you typically go to closings. We've done closings together. Costner's not allowing people in. I don't think Del Fussell and other like McDonald and Associates and stuff, they're not letting people in unless you're a signer, and we're not. So how are you speaking with your clients? Is it through Zoom and like this type of stuff?
No, that's a great question. Yeah, because it really is bugging me not being able to go to closings. But heck, I guess it sounds like as you as a real estate agent, you're even kind of limited. You don't
Nothing.
want too many people in there.
You can't
So
do nothing. So
yeah, so what I've kind of been doing in common practice is, I'm always going to be involved the whole way through the process. So I'll be chatting with you. It's not like you hear from me at the beginning and the end. But once we get to the end and we have those final numbers, usually calling people up to go through that together, or a Zoom if they prefer that. If you're tech friendly, I like Zoom personally because you can kind of do that face-to-face interaction.
I wish I would have bought Zoom stock before this happened.
Oh my goodness, that would have been a good one. That would have been a good one.
It would have been a good one.
Yeah, and I bet they're getting a lot of people. I'm going off track here, but I bet they're getting a lot of people buying the pro version. I was talking with some buddies the other day, and we were having a great conversation. Carry on. You hit that 40 minutes, they cut you off.
Yeah,
The
I'm
free
looking at the
video.
clock now because I'm still using the.
Yep. So I bet they've got a lot of subscriptions.
Yeah, I mean, this is interesting. This is way different than the crash of 09, 08.
And that's what's so important too. Yeah. I mean, I think you hit the nail on the head there. This is a completely different economic downturn than what we saw in 2008, 2009. I mean, you went through it. Lending was the Wild West. I mean, there were loans getting put out there that should have never been originated.
No
Stated
down
income,
home.
it was bad. Like,
Are you breathing? You can get
yes,
out.
you're ready. Yep, exactly.
Yeah.
And so now I can guarantee guys, like even before this happened, lenders are taking precautions. There's overlays, which we already talked about, debt to income ratio maximum. So they're really doing their due diligence to make sure that people get put in the right loan and they're going to be able to afford a house that they're in. Because last thing you guys want to do, or last thing anybody wants, is a foreclosure or something like that. Those have long-term credit effects. And I can just tell you from the mortgage side, I mean, there's seasoning periods. I've taken applications and people have had foreclosures in the past, short sales. Guys, there's seasoning requirements. If you've had one of those, you're going to have to wait 2, 3, 4, 5 years before you'll be eligible to buy again. So.
And that's why it's really important to know the fine print, because a lot of people who did those short sales didn't know how it was going to affect them now. And so if you're going to do a forbearance, read the fine print to see how it's going to affect you in the future.
Yeah, couldn't emphasize that anymore.
There's modifications, like they may modify your loan. Some of them may,
Yeah. I didn't quite read deep enough in to confirm that, but that is definitely something good to talk about with the servicer, because I'm sure everybody's got a different way of doing it. But yeah, I mean, I wouldn't be shocked if potentially, I mean, that money's going to come due at some point.
Yeah,
So are they just going to take those payments and tack them right back onto the loan balance? They could, which is ultimately what a loan modification is. And I don't know if it's even legal to change the interest rate, but I don't know, that's why you got to read the fine print.
if you agree and the bank agrees, then I mean, it's a contract if everyone agrees, so it's possible. But I don't know. Here at home until further notice. So
Yeah.
I do appreciate you. I would ask you what the rates are today, but it'll probably change by the end of the day.
Yeah, that's true. And I don't even want to tell you today. I don't want to scare people.
What was it this morning? Like
they're above 4% right now.
Wow.
Yeah, but that's not forever. So like I said, now is still a good time if you're comfortable.
A lot of people are gonna have babies soon.
What do they call it? Are they going to call them coronials? I think is what I heard.
Are you a coronial? Yeah. And I was joking with my husband. I was like, this is where marriage is, either make it or break it. So
yep, so true. It's so funny you say that.
So it's fun so far.
It is. I feel like I don't want to say this whole thing is not a blessing by any means, but it's given us more time to come closer with those that we love, family, friends,
even
and all
neighbors.
that. So.
Like I have neighbors I've never seen before, like ever. Like they're outside, they're playing with each other, or they're eating out on the back deck, they're taking family walks. So I do feel like a lot of relationships will be recharged and stuff right now, which is nice. I know that my husband and I have spent a lot of time on our back deck, and my kids play outside in the backyard a lot more, and I'm at home more.
Well, we've been lucky with how beautiful the weather has been. I know you probably got listeners all over the United States, but at least here in North Carolina, it's been beautiful to get out there. And
it's been really nice. Yesterday was like 84, I think, and my peas and my green beans were starting to sprout. Potatoes started to sprout a little bit.
You're going to have to send me some.
I'll have so much because I ordered a little greenhouse because I'm just going to go crazy. It looks with flowers, and it's going to be amazing this year. I'm going to have a little cottage garden.
Yeah, no, that's awesome. And I think that's what we all got to do. I think we all got to find the positivity in these times. I mean, it's very tough and it's unprecedented, but we will ultimately get through this, and hopefully the economy and the housing market will be just as strong when we come out of it. I mean, there's definitely going to be a little bit of blood in the water, but it's going to get better.
Yeah, it's going to be. We'll see what happens. But thank you so much. I'm going to put all of Cole's information down below, so if they want to contact you to refinance. What states do you cover?
Yeah, so I'm actually able to lend in all states now. So now that we're under the banking umbrella, we're under a little bit different umbrella. So, and one of the cool things, guys, too, is I'm a mortgage broker. So one of the cool things about that is I have the ability to shop around for you, and we have a few different channels. So, I mean, if you fit into a unique bracket, or we're able to take a look at some different things for you.
Sweet. So I'll just put all states. Call Cole, but only Carolina for me.
Yeah. That's right. Well, you can refer anywhere though, right?
Yeah, I can refer. I have a really good referral network with Tom Ferry, but I only know North Carolina and like this section of North Carolina. So because I don't drive far. I mean, I do. Kings Mountain to Salisbury is pretty wide, but that's about it. But I'll put all of Cole's information below. So if you want to talk about refinancing, getting a loan, contact him. He's been amazing. He's been, one of my preferred lenders for like almost 2 years now, at least.
Yeah, I think so. Yep.
Yeah, so he's good. He's helped a lot of my clients. So I know that he can help you guys too. If you have like specific questions, reach out to Cole as well. I won't put your cell phone on there, but I will put your email address and your website to go.
Yep, perfect.
Okay, cool. And as always, all my information is down at the bottom and the notes and stuff like that. But I think you answered all of my questions. Did you have any real estate questions for me? Because I'm at home.
No, guys, just to kind of vouch for Ashley. I mean, she's one of the most knowledgeable real estate agents that I've ever worked with. So she's been through the hard times, the great times. So reach out to her. Any advice, that's what we're here for ultimately. Just to be able to make you guys feel comfortable about the decision that you may be making if you choose to purchase a home, or we're even here to kind of help you right now with everybody being at home. Now's maybe a good time to start prepared for home buying in the foreseeable future. I mean, if you got a little bit of credit troubles or something like that, I mean, we have great contacts, Ashley and I, where we can get you in touch with the right people to begin the preparation.
Yeah.
If you will.
And then by the time all this is done, rates will be great, good housing prices, you'll have the credit score, and all that will just come together.
That's right. That's right. But
all right. Well, thank you so much, Cole. It's lunchtime for my kiddos.
I hear you there. I'm ready to eat something myself.
All right. Well,
All right,
I'll talk
Ashley.
to you later.
All right. Have a good one, guys.
You too.
All right. Bye-bye.